Is Tesla heading for bankruptcy? We just got this video from Meet Kevin. Tesla, the next Peloton bankruptcy coming. Of course, Meet Kevin is the clickbait king, and Tesla stock is his single biggest holding in his stock portfolio, and Meet Kevin is worth well over $10 million. So I like to pay attention what he's doing and what he thinks about Tesla. And he is a lot more balanced with his positive and negative views on Tesla than a lot of the bulls. So I like to have his perspective as well, which I don't think is complete because he is not basing his model on full self-driving becoming a reality. But let's get into what he thinks. I'll summarize that video for you as well. Comparing Tesla to Peloton is scary because Peloton is down 94%. However, there is a major difference between the two. The biggest one being Tesla is wildly profitable, and Peloton, yeah, we're not in a good situation. Tesla, even though the backlog is shrinking, because their margins are so high, they could still easily reduce pricing to spike up demand even further. And of course, they are still working on that $25,000 car. There is that. We don't have it because Tesla will sell every single Model 3 and Model Y that they will make. Also, we have to remember the 7,500 credit that US buyers will have. Meet Kevin has a Tesla stock target for 2025 of $546. That's over 40% compounded return per year. That is preposterous when you think about that return. And Meet Kevin, he doesn't really model full self-driving or anything else other than just the core EV business. Also, Tesla has a huge order backlog outside of China, and they can send those vehicles to those other countries. For example, Europe has quite an order backlog. And Tesla just had a record number for exports in October. And remember, for China, for Chinese market, we are only now going to see the real effects of a price cut, and we will see that next month when we look at November sales. We will be able to conclude how much Tesla's demand changed because of the price cuts, and then we could sort of model that change to other markets as well if we are really concerned about demand issues in other regions outside of China as well. And it appears to me many Tesla stock investors are forgetting a few key things. So if we know, let's say, think about being in Tesla's management position. Of course, you want to clear the backlog as much as you can if you know you're going to reduce the prices because you want to capture that profit where people happily already ordered at a high price. So obviously, we want to clear that backlog. And of course, if I was in Tesla's management, I wouldn't make that statement officially unless I was completely cornered and I cannot find a way to talk myself out of making that statement directly. That's what I would do if I was in Tesla's management. And notice how the orange one is the rest of the world. Then we see dark bluish color, that is Europe, and then lighter blue, that is US. For US, we know we will have that ginormous $7,500 US dollar incentive starting early coming year, basically from the first day of the year. And we can see, even though the production is increasing, remember Giga Austin, it is being ramped up. And the backlog is not really, it came down a little bit here, but with the incentive, it's going to go way back up again. And for Europe, we can see the backlog has increased also, as well as the rest of the world. So Tesla can now focus Giga Shanghai on exports a lot more. So even if, let's say, the worst case, demand is not strong enough in China to take all of those orders, Tesla can still export all of the vehicles, no problem at all. If you invest in Tesla stock short term, I don't know why you would do such a silly thing, but if you have, then I'm sorry for you. But if you are investing long term, then probably you are investing because of full self driving. For me to invest in Tesla stock without any full self driving is not enough. I wouldn't see enough return for the risk that I'm taking. But even without full self driving, I think I will still be making money. But I wouldn't be a fan of the risk to reward ratio. So the core EV business is my insurance policy if full self driving, for whatever reason, doesn't work as well as we would expect. And so for that reason, my position on Tesla is a little bit different from, or maybe a lot different from, at least Wall Street for sure. You see, Tesla's operating margin, if we just go to Q3 was 17.2%. It's likely to increase, but let's just say it's going to be 17%, or let's say only 15%. We know that most cars that are sold right now, people do not buy full self-driving. I believe full self-driving will be solved. So for me as an investor, my main priority is how can we maximize the number of vehicles, of Tesla vehicles on the road? Because the moment we turn on full self-driving, a lot of people will buy that option. And for how much can you sell it, then it's actually there. 20,000, 25,000, 30,000. Okay, so think about this. If you sell a car that's, let's say, $50,000, and you sell a $30,000 FSD option, how much money are you going to make? And then Tesla is not competing against other EV makers, at least not yet. That will become true later, but not yet. The main competitor right now, still, then most people look at what car they are going to buy. They look at a gas-powered vehicle, and then they look at an EV. And most people still go with a gas car. Still, it doesn't make much sense, but soon it will make absolutely no sense to make that decision. And currently, the only company that can compete with gasoline cars if we really go into a recession is going to be Tesla, because Tesla can drop its prices by, let's say, 17% on basically every model, and they will still not lose money. You see, this is one reason why I am not so much for the buyback, at least at this moment. Now, if the stock keeps dropping down, and if it drops down to, let's say, 140, then I am all over buybacks. I think Tesla should definitely do a buyback then. But I don't see at all how any other EV maker would be able to compete against Tesla's vehicles if Tesla all of a sudden drops all of the model prices by like 10%. And also, in different markets, they can drop the price a lot more compared to ours. For example, US, because of a $7,500 tax credit, there's going to be way too much demand. So they could further drop the price in China temporarily because if Tesla has a demand issue, everyone else is going to have a demand issue. Every other automaker is going to have a demand issue. And that would only be because of a recession. So everyone would be suffering from demand issue because a lot of the automakers, they are struggling to transition to selling EVs because they are only profiting from internal combustion vehicles right now. And their profit margins are shrinking because they are scaling down their production. And yet they have to make those huge, ginormous investments into EVs from which they are not going to make money for quite a while. So then if we do have a recession and demand collapses for new vehicle sales, the question then becomes, for how long would that last? Maybe a year? And during this time, I believe Tesla would simply increase its market share. Now, maybe profits would be lower during that time overall, because if Tesla has to drop prices, profits, of course, would be probably lower, even if you deliver a lot more vehicles. And if there really is a demand collapse, and if we cannot, for some weird reason, sell Model 3s and Model Ys anymore at prices that we would want to sell them, Tesla, I believe, would simply focus on making developing a cheaper car much sooner. And if Tesla releases a $25,000 or $30,000 vehicle, we know there would be floods of orders flooding in non-stop. And also, Cybertruck, anyone? The Tesla's cash position continuing to get stronger. Now in Q3, $21 billion of cash. Profit margins, I expect them to stay very strong. We haven't even implemented 4680 batteries, gigacastings, and many other things that Elon Musk is going to keep thinking of. For example, one of the latest ones, just getting rid of ultrasonic sensors. And currently, the market is just really worried about Elon Musk spending a lot of time on Twitter. I think that's one of the big drivers for the stock to be so low at this moment. But that is going to end. Now, I think Gary might be a little bit optimistic about overhang lifting in November. I think that might be stay for quite a while, but eventually it will go away. And Kevin's target, I think, is realistic. Although 3 years to me, that is short term. So I wouldn't make any predictions just 3 years out. At least I wouldn't make my investment decision based on that and put money in Tesla stock, because I would think it would be at a certain place in 3 years. I like to give myself about 10 years. And I'm intending to keep all of my Tesla stock until the end of 2030, or at least until full self-driving is solved, which maybe is going to be sooner than we all expect. But even then, I would expect to hold Tesla stock for quite a while. And as long as I can see that there's another next big thing coming, maybe I'll hold Tesla stock for decades. My name is Matt Postis. These are 48 reasons why I only own Tesla stock in my stock portfolio. I'll see you later today. Thank you so much for watching.